So here's one that it's gonna be quite interesting. I think. I don't know. It's a bit of fun.
I wouldn't expect anything else.
It's something. I'm going back to my roots, and by back to my roots, I'm going to talk about the thing that I talk about every time: IPOs.
Ooh.
Oh yes, this one is Coinbase.
Oh yeah.
So
there was a chance that I would have done this.
Yeah. Well, I wanted to beat you to it.
I feel like that was risky of you because it's
I literally told you not to do it.
Did you? I don't remember.
I've said multiple times that I'm going to do it.
That must be why I didn't do it.
Yeah.
Yeah.
Yeah. On episode 7, I said I was going to, I think.
Did you?
Yeah.
Okay.
And
was that before that IPO?
And I think on episode 4, I think I also said it. Anyway.
Really?
Yeah.
Okay.
You know, you got to expect these things. And then I'm pretty sure I texted you the other day. Don't do Coinbase. Anyway, I'm glad you're surprised by my content. It's good. Oh yeah, making some adjustments. Yep.
Continue.
Nice. So this one's cool because it IPO'd via direct listing.
What is that?
So it's different from a traditional IPO.
Mm-hmm.
And this is actually the largest, and it turns out I should mention for episode 9 that Roblox was the largest direct listing, which would have been a cool fact to include. And this is now the largest direct listing. So they've overtaken Roblox, which I just talked about on episode 9. Yep. And so yeah, it's the largest direct listing ever. Yeah. So the current market cap at the 24th of April, which is today, is 58 billion. But it was listed on the 14th, so that was 10 days ago now. So direct listings are where the shares are directly sold by the owners without the help of intermediaries and underwriters or liquidity providers. Okay. Like the market makers and the Goldman Sachs and all the investment banks. And
are they new shares?
They're all shares that have been held previously. Like so there's no dilution from the original owners, all that kind of stuff. Okay. So here's why that is interesting, because they when they direct list, they choose a value that isn't like a lower value to get people like pumping the stock price up. Yeah. They choose a value that like is actually kind of realistic. Yeah. And or a lot more realistic than, and especially with all the other IPOs pumping up like crazy, right? So they choose the level that they want to direct list at.
Interesting.
And they don't use liquidity providers or anything like that. So with the traditional IPO, there's a market maker who buys, or underwriter essentially. Yeah. They hold a huge amount of like shares.
Like a hedge fund or something would be that, right?
No, it'd be like Citibank or or a traditional like investment bank kind of thing. Okay. And what they do, because hedge funds want to maximize their profits or whatever. Okay. These guys are just in a deal to buy and sell shares to keep the market moving. So they're a liquidity provider. So typically there's one of those helping out. Okay. This time there wasn't. It's just let the market go and see what happens. Yeah. So it's got no help of intermediaries. So I like this one because of Garry Tan. Now this is interesting. He's a VC. Yeah. He invested in Coinbase early on. Yeah. He's actually the first, from what I can find, he's the first investor in in Coinbase, which is really cool. Wow. So he's and I'm going to actually, in a later episode, I'm definitely going to go deeper into Y Combinator and Sequoia and all the other VC firms and how Silicon Valley really works. Yeah. It's something that I've been getting into a lot lately. Yeah. But so he's the VC that invested in Coinbase early on. Started with $300,000 in 2012. Yeah. And that investment is now worth $2.4 billion. Whoa. So his buy-in price was
pretty crazy.
His buy-in price was, well, and it's possibly more. That's on the day that the stock launched. But
I think Coinbase launched.
Yeah, Coinbase launched. Yeah. So
isn't it less now?
It's not.
Oh.
So
okay.
So his buy-in price was 15 cents. Yeah. And the stock price IPO'd at $250. Yeah. Now the price you'll see on Google is $328 because that was the first price that you could buy the stock at. Yep. So it got the random IPO bug where it just shoots up anyway, even though it was overvalued to start with or whatever.
Yeah.
Or like it was a high value to start with because they wanted it as a high value to start with.
Yeah.
So the first price you could actually purchase it for was $328.
Right.
It's now at $291.
Right. Okay.
So that's higher. That's higher than the technical IPO.
The 250 or whatever it
250.
was. Yeah.
But it's lower than what you could actually start with.
Okay.
But it did top out.
How interesting.
So it's down 11% in the last 10 days.
Yep.
But it's been a bit of a rough period. I don't know for
just in general.
For the last for the last month or whatever. So it's been a bit more plateauy / down.
Yes.
Than anything, I think.
Yes.
But the stock actually topped out at 420 on the first day.
Whoa.
So
that's right. I've seen those memes.
Yeah. So it went pretty wild.
Yeah.
So he essentially made over 6,000% on the return on that one.
Gotcha.
This guy's really cool because he's someone that I've looked up his net worth before, all that kind of stuff, right?
Yeah.
But I think because he's sort of lesser known, he's not as much in the public eye. He's got a YouTube channel now, and so he's getting more into being more public, I guess.
Cool.
But because I saw an interview of him a few years ago, and so that's why I liked his the way that he did. But he's not that well known.
Is he just an investor?
He was a partner at Y Combinator,
right?
And now he has his own VC firm.
Has he started anything himself that you're aware of?
Yeah, so I think he had his own company.
He did. Okay.
And then after that, he became a VC.
Yep.
So that he could keep with the money that he made from that, I think.
Yep.
So
some fans.
I hope we got that. Audio.
Yeah, I think we definitely
did. Great.
If you can hear it, we got it.
This would be a quiet Tesla going past on the other way. Anyway.
Bit of road noise.
Yeah, that was. Yeah.
Anyway.
That was interesting. Anyway, so.
So he's done it all.
So yeah, he.
Awesome.
I've got a tweet with some of the other buy-in prices.
Yep.
I'll definitely be showing that one. But yeah, his is 15 cents.
Wow.
And it goes up and up and up to $29 each for.
Do you have any idea when that was?
So it was in 2012.
Oh, okay.
And pretty decent for a 9-year.
Yeah, very good.
9-year return, 6,000%. So so it's decent. So I've looked up his, I've looked up his net worth before and stuff like that.
Yeah.
And it's really funny because one of the articles was like, oh, he's probably worth we haven't got an exact figure, but we've estimated it to be 5 million.
Yeah.
And
5 million?
Yeah. And I was like,
what?
And then here's this guy turning $300,000 into $2.4 billion.
Yeah.
So it's like, they're getting their very old information.
True. Okay.
But
maybe he's got 5 million of cash in the bank.
Maybe that's what they were basing it on.
Yeah.
But I don't think it's 5 million though. But yeah, I saw a different article, and it had 600 million as like the number.
I think a lot of those things are just clickbait.
Yeah, definitely. And so anyway, the back to Coinbase though. The original name was BitBank.
Okay.
So. Obviously in that time between like 2012 and now, the Bitcoin's gone from having a market cap of under $1 billion to having a market cap of over $1 trillion.
Yeah.
So the founder's name is Brian Armstrong, who's still the CEO.
Brian Armstrong,
yeah.
CEO. Okay, cool.
Yeah. So
awesome.
So he's the way that Garry, who's the VC, going back to him for a minute, he describes him as Steve Wozniak and Steve Jobs.
Oh wow.
So he said that he is the guy that can sell it, and he's the guy that can code it.
Yeah.
So essentially, that's a really cool combo because it's like you got he's a developer and a really good sales guy that's like rooting for his own business.
Yeah.
So that's a pretty cool compliment, I reckon. Like
that's awesome.
Being both of those roles, because I've never really thought about both of those roles as polar opposites kind of thing.
Yes.
But working together well. So yeah, if you can be both, that's kind of cool.
Mm-hmm.
So here's a good one. I actually heard the CEO Brian actually say this, which is funny because I thought it was just a. Well, I knew that it was a term, but it follows the picks and shovels approach, which is the picks and shovels during a gold rush.
Oh yeah.
So that's where instead of looking for the gold yourself during the gold rush, you give the people the tools to find the gold themselves.
Yeah.
And then you make heaps more through giving them that, rather than worrying about, what's the Bitcoin price going to be? What's the Bitcoin price going to be?
Yeah.
You can just give them the trading app to trade Bitcoin on.
Yes.
And it's like, that's actually a cool way
really
to do
good.
it. Like,
if you know that gold's going to be valuable, but it's like risky going out and finding it because there's no chance. Like, there's a small chance you might find it.
Yeah.
It makes a lot of sense.
Yeah.
Just give people access to it. Yeah, it's good.
Yeah. So it's a cool app. It's got a very clean design. So it's based on.
Yes, I've seen it once on someone's phone, and I was really impressed.
Right. Okay. I've never actually seen the app. I've just looked at I've seen pictures of the
I'd agree.
user interface.
It does look really good.
So yeah, it seems it's similar to Robinhood's. Kind of design.
Yeah.
It's and they've built their business model around building a level of trust with users.
Yep.
So the trust is a huge thing because it's people's money, and they're obviously trying to make it so that it's not going to like lose people's money.
Yes.
So yeah, onto the business model.
Yes. Tell us.
In 2018, they had actually. Here, I'll get you to guess. All the numbers. In 2018, guess how many users they had.
2018, how many users? Are we in the millions?
Yeah.
Okay. Right. How many users in total? Active users, I suppose.
Yeah. Well, it's total. So the way that they measured it was total verified users.
Oh yeah.
If you're a total verified user, that means you're going to have money in there to like.
Yeah, most likely.
To trade. So it means that you've at least made an account, put money in there.
Yeah.
And that counts as a user. Like that's
10 million.
It was 23 million.
Wow.
Guess
that's like the population of Australia almost.
Yes, that is, yeah.
Okay.
Yeah.
And that's good.
Guess how many users they had at the end of 2020.
Right, okay. So 2 years later, big change in perception of Bitcoin and crypto in that period. I'm going to say it's more than double. Any indication on that one?
No.
Okay.
I just wanted to see where you would go with it. Obviously nowhere.
No, I was going to say somewhere in like the 50.
Yes.
What is it?
It's 43 million.
Oh, okay. Wow, okay.
So yeah, they've grown by 20 million, which is cool.
That's insane.
So that's, that 90% growth.
I was just going huge because,
no, it's pretty impressive.
Okay.
So they've got 43 million, that's retail users.
Yeah.
Then they have 7,000 institutions on top of that, which is cool.
Really?
Yeah.
I didn't know they did that.
Yeah, so they sell both retail and wholesale.
Right. Cool.
And like have products for them, I guess. They would have a different. It wouldn't be an app for an institution.
Maybe just a guy or something. You reckon it's just a few people's jobs?
Yeah, I would say so. Yeah, and
they've just got clients.
Yeah, they would have the interface, I guess.
Yes.
But they would have like all sorts of levels of authorization on top of it, I guess.
Yeah.
There
you go. Cool.
So yeah, it's pretty cool. So the way that it makes money is that they charge a fee for every buy and sell of crypto, right?
Yep.
So the fee is actually variable based on volume.
Yep. Okay.
But the average fee per trade, actually, you can guess this. Guess what the average fee that they got from their clients was per trade. Yeah.
Right now. In dollars.
No, in percentage.
In percentage.
Yeah, because it's variable based on volume.
Okay, in percentage, I'm gonna say. I'll say 2%.
It's so the average fee that they got was 1.4%. So
wow.
It's a pretty hefty fee on trading.
Okay.
But so that means that's interesting because what they point out.
Yeah.
They say that with larger transactions, they pay a fee. Like the larger transactions pay a fee of 10 basis points, which is 0.1%.
Yeah. So
which
there's a
means
threshold. Is that what you're saying?
Yeah, well, that's institutional levels, so 0.1%.
Right, okay.
And they're doing larger transactions, which means that they still make $1 million out of a huge thing.
Yeah.
So that means that there are like retail traders doing small stuff, getting paid that are like, being charged 2.5% or 2% or something like that.
Like, and the value of that is potentially more than a wholesale trade.
Yeah. So the larger that you trade, the less percentage like that they take. But they claim that a lot of the value that they provide is in the integrated security in the wallets and products like that.
Yeah.
So they say there's a lot of value that they're providing there for free, and then they can charge the trading fee as the way to make money.
So they have it's all exchange and a wallet.
Yeah.
Okay, cool.
Yeah.
Sick.
And here's an interesting one. We talked about this in episode 10, last episode. You can earn extra yield through staking, which is something they've just introduced.
Cool.
So staking is where you put a and you might be able to explain it better than me. Staking is where you put your crypto assets up, and we got that plane again.
Yeah, that's pretty cool. Just a little Cessna or something. I don't know planes.
I'm gonna give that a correct from me. Definitely a Cessna.
You reckon?
No, I don't know.
Oh, okay.
I don't know planes either. Gulfstream.
Perfect. Boeing.
Yep. Airbus. It's a 747.
Yeah, that's a famous one, isn't it?
Yep. Yes, it's a very tiny 747. So staking. Back to this.
Staking. Yes.
Staking is where you put your crypto assets up as collateral.
Mm-hmm.
They go into a pool and they're used to verify transactions on the blockchain.
Yeah. And
then you get a reward for that.
Yeah, that's right.
And that means you can't sell them in that period because they're put up as collateral kind of thing.
Yeah.
So yeah, you're forced to hold, I guess.
So they have that service.
So is that
certain coins on there or something? Do they?
Yeah. So they got that for Ethereum and whatever.
Yeah.
Do you have anything to add to staking?
No, that's awesome. No.
Good explanation.
I think we talked about it a fair bit last episode.
Yeah.
So I think it's fine.
So yeah, that's how you would describe it. So onto their financials. Their revenue at the end of 2020 was $1.1 billion.
Okay.
And that's increased 139% since 2019.
Wow.
So obviously, 400 million or something.
So they only make money from fees.
Yes.
They don't take like a spread of the buy and sell price of stuff or whatever.
I always assumed that brokers do that anyway.
Okay.
But
so it goes without saying, is it?
Yeah.
That would be part of their revenue, wouldn't it?
Well, yeah. I would assume that. Yeah, there's a bid-ask spread.
Would have thought so. Yeah. Because who knows? Who knows what the price is?
Yeah.
You know?
Yeah. There is usually a bid-ask spread, but.
Okay.
Yes, but I can't say that for sure because I don't know.
It's a strong maybe.
Yes, it's a strong maybe.
Perfect.
Yeah, so on their platform, 197 billion of trading volume in the last year.
Wow.
And earnings were $527 million, which is a margin of 41%.
Wow.
Which is quite decent.
That's really good.
So yeah, obviously it's pretty lean.
Yeah.
Being a broker.
I
wonder
how many employees they have. You don't know, hey?
I don't know because that's not something I usually look up.
No, it's not.
But it is something you usually
look up. It is something I usually look up, which is why I'm wondering.
Doing it. Yeah. Yes. I'm going to guess that there are 1,000. And roast me in the comments if I'm wrong. Roast me in the Clubhouse comments. So yeah, a key risk is that the revenue is correlated very heavily.
Okay, sorry.
All right, what is it?
I just interrupted you. That was rude.
No.
I've got the number.
What is it?
What did you guess?
1,000.
1,249.
That's pretty close.
That was pretty good.
Yeah.
Robin Hood?
Oh, Robin Hood. Am I guessing that one as well?
Yeah.
All right. I'm going to say Robin has 2,300.
1,281?
Wait, Robin Hood has 1,281.
Yes, about 40.
And Coinbase has
1,249. So about 40 difference.
Yeah, right.
And SoFi, which we've talked about on the podcast.
Yeah.
Do you want to guess?
Similar. SoFi isn't... Oh, similar. Okay. I thought SoFi was a big operation.
1,383.
1,383. There you go.
Yeah.
Didn't even let me guess.
Sorry.
No, that's okay.
Continue. I shouldn't have interrupted you.
No, that's okay.
Okay,
I liked it. Yeah, keep doing it as much as you want.
Perfect.
Always interrupting me. Women. So
got that bit out.
Yeah. I don't know where I was going with that. Not in a good place. A key risk is the revenue is correlated very heavily with the price of Bitcoin.
Yep.
So so there's a graph of that. I'll add that in. Cool. At the bottom.
Awesome.
So when Bitcoin's price is increasing, way more people use Coinbase.
Yep.
So there's that risk.
Yep.
That if Bitcoin stops moving or stops being volatile or anything like that, it's going to obviously have an effect on this Coinbase's revenue.
Yes. Their transaction would also be a sell transaction as well, right?
You'd make money on the sell side, but
so volatility, it's just up or down doesn't matter to them necessarily.
Yeah, when it's going up, more people are getting on the bandwagon, which means that they're making more revenue from the buy side, I guess.
Makes sense.
So one of the asymmetric benefits here is that they think cryptocurrency is still in its very early stages.
Yeah.
And with 43 million verified users on Coinbase, they see their total addressable market as the 3.5 billion people that use smartphones in the world.
Yeah.
So there's a lot more potential and market to capture.
Mm-hmm.
I personally don't think that out of the 3.5 billion people that use a smartphone, there's a huge portion of them that are not going to be interested in cryptocurrency. I
agree. But even half of them.
Yeah. But then, I don't know. A lot of them are old or young or lost their money or they don't like investing or they don't see a use case or anything like that. Anyway, apart from that, I've got the price of Bitcoin today is 65,000 AUD.
Jeez.
Which,
bit rough.
It's going down a bit. I don't know. It's interesting.
Yeah, it is interesting, actually. Everything just kind of went down yesterday, I suppose. Or the day before when they announced those capital gains tax reforms in the US.
We should have a comment on... Everyone should comment on what they think the price will be. No, everyone comment on what the price is right now.
Okay.
And I wonder if... Well, it'd be interesting to see if it's 80,000, 100,000, 40,000. You know, it'd be cool.
Yeah, it'd be cool. Be more cool if it's 100.
Yeah, more... Yeah.
A bit less cool if it's 40.
Yes. That's true.
Awesome. That's sick. So you haven't told us if you own it yet.
Yes. I have 2 shares.
Oh, cool.
How
much did you buy them at?
I was just looking at cryptos.
Did you buy them at 420?
Cryptos are... so Bitcoin's at 65,700 AUD. I should find the US price.
True.
Address our US audience, which is 48% of our listeners. Only 6% are Australian.
True.
So we're going to have to address... address it to the US. Oh, this is a bit clunky, isn't it? 50,326.
Wow. Okay.
So yeah.
There you go.
We'll and see what it is. Ethereum is.
I don't care.
You don't care.
I'm joking.
Ethereum's 2,300. So
nice.
Yeah, it's cool. So I've got 2 shares of CoinSpot. Coinbase.
Tell us about CoinSpot.
No, I don't know anything about CoinSpot. Forgot what company I was doing.
Coinbase. Okay, 2 shares Coinbase.
Yep.
Any idea what you paid for
them? 325.
Okay.
They're $2.91 now. So
perfect.
10% loss. That's all right though. It's all part of the fun. Wouldn't worry about
it. Awesome. Sick.
All right.
And so yeah.